Hello everyone, good day. I hope you're all doing great. I'm here with you for the daily analysis of the USDJPY currency pair on March 16th. As we saw last week, the price of this currency pair experienced another 1% increase, and overall, since the start of the Middle East conflicts, we've seen more than a 2% rise. Following the recent
Learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
increase, the price is now within a weekly FBG zone and is reacting to the 50% line of this range. At the start of this week, with the retreat of the dollar index, we saw the price open with a downward gap, and now the price of this currency pair is trading around 159.254. The increase that occurred on the last trading day of last week caused the price of this currency pair to reach its highest level in the past 20 months. As we mentioned in previous analyses, this could increase the risk of intervention by the Japanese government to support the yen. However, for now, as long as we remain in this tense wartime environment, we expect the US dollar to stay strong while the Japanese yen weakens. We are currently reviewing the economic calendar. As you can see, today and tomorrow there won't be any major news for the USD-JPY pair, but later in the week, on Wednesday and Thursday, there will be important news releases for both currencies. On Wednesday, we will have the important FOMC meeting, and on Thursday, the Bank of Japan's meetings will be held. In both of these sessions, the interest rates for US dollar and Japanese yen assets will be determined. If there are any changes, we can expect a significant impact on the future movement of this currency pair. By examining the currency strength chart over the past week, we can see that the US dollar was traded as one of the strongest currencies in the market, with more strength compared to the Japanese yen. However, on a daily basis, we see that the dollar has weakened and is now in a weaker position compared to the yen. One of the main reasons for the weakening of the dollar could be profit-taking from the recent rise in the dollar, and we also know that traders usually reduce their risk before the interest rate announcement, which can decrease demand for the dollar. However, as you know, the conflicts in the Middle East are still ongoing, and as long as we do not see an improvement in this crisis, we cannot expect a significant weakening of the dollar. Now, the price is in an upward channel with a gentler slope. And during last week's price increase, we saw that the price reacted to a daily BPR in the 159.74 area. We are currently analyzing the 1-hour time frame. With the weakening we've seen from the dollar, we can expect the price of this currency pair to enter a range-bound zone. However, as long as the military tensions persist, we still consider this trend to be bullish in the medium term. So, we can keep in mind that if we see a price drop reaching the double bottoms, the price could collect the significant liquidity that has accumulated in this area, or even, if it penetrates deeper, it might reach the 1-hour FBG liquidity around the price level of 158.77. After we observe renewed strengthening of the dollar in this area, we can enter a buy trade targeting the previous high. Wish you success and profit.
7 powerful volume trading indicators: footprint, volume profile, and fast scalp. Level up your trading.